Hello, everybody. Welcome to VRIC Media, your most trusted voice in metals and mining. We are bringing the VRIC to you each and every week with our series of expert online panels. Very excited for the one we have lined up for you this time. We've got Adrian Day, CEO of Adrian Day Asset Management, along with Jeff Clark, founder and publisher of Gold Advisor and the author of Pay Dirt. We're going to be diving into, of course, gold and silver today, both the metal and the miners. Gentlemen, it is great to have you both on the show again.
Well, thank you very much for having us, Jesse. And as I always say, great name.
Yeah. Yeah. Thanks for having me, Jesse. Great to be here.
Yes, thank you, Adrian, for that compliment. I get people asking me in my comment section sometimes when I interview you if we're related. So definitely in good company. But I want to kick off the conversation today discussing the silver market because everybody's been talking about gold, but we seem to be holding steady here above $36 an ounce. Yesterday it was trading at 37. I actually haven't checked the price today, but I'm guessing we're close to the same level. Jeff, you might have a finger on that pulse. Are we over 37 still?
No, as we talk here, the bid is 36.83 spot.
Okay, so very
Futures is
close.
probably over 37, but yeah, it's still high. I think there's a couple things that I would want to point out about silver right now.
Yeah.
One is that $37 level, we have not seen that since 2011. So it's been 14 years roughly that we've not seen silver at $37 an ounce. And we all know what was going on in 2011. The price was running, and just like it's running now, it was running a little hotter than, a little faster, I mean. But obviously it ran up to 48, 49 there back in 2011. That's where it peaked. So I think that's the first thing is that we've broken out to a level we've not seen in 14 years. And the second thing I would say about silver, I think everyone in this audience knows that, but in a bull market, gold leads, silver lags, and that's what we've seen for the most part. Silver's started to catch up and outpace gold a little bit here just real recently, but the gold silver ratio is still at 91 as we talk here today. So value is still there, even though silver is running very well and breaking out. So I think technical indicators would say that this is a breakout. Silver is going to keep running, and that it has a lot of catch up yet to do to pass gold. As most of us know, silver outpaces gold, outperforms gold before the bull market is over. So that's still ahead. I could easily see the gold ratio getting below its average of 50 to 55, depending on, how far back you measure it. But it could easily go down to 40, 30, maybe even back to 20 where it was in 1980. Regardless of where it ends up, though, the point is that there is still a lot of value ahead for silver. With the idea in mind, there's going to be corrections along the way.
Yeah, I'm going to turn to Adrian in one moment, but I just wanted to follow up and ask about the silver market now versus the previous two times it went to all-time highs because they went up. The price of silver went up. Of course, we know about the Hunt Brothers silver squeeze in 1980, and then the last high you were talking about in 2011 rose sharply, but then collapsed back down very rapidly. Do you think we'll see similar price action again if we do see silver get to that $50 or new all-time high level? Or do you think
That
that we could see a more sustained higher price in silver in the long run?
That's a great question because silver is very spiky, right? I've documented this in prior talks. It's very boring, boring, and then boom, and it spikes and it gives a lot of that back. What we're seeing right now, though, isn't quite what we saw in 1979 or 2011. It's a more gradual, sustained rise. It's not as spiky as it was back then. I think if you do see that spike where, it doubles in 6 months or triples in a year or something like that, that would be a signal that, hey, we're starting to get frothy and you might want to consider taking profits. But I haven't seen that so far yet. I think the value is still there for silver going forward.
Adrian, your thoughts on the silver sector at present?
Yeah, well, I certainly agree that, the best is ahead for silver. No question about, well, no question about that in my mind. I'm just not sure that we're at that point yet, to be honest. We've seen a good move. I'm not a technical analyst. We've seen a good move. Momentum seems to be slowing a little bit. On the positive side, we've seen a huge increase in silver shorts, commodity shorts, which is generally a contrary indicator. Um, but we've got some negatives on the fundamental side, and that would just include a slowdown in China that seems to be happening. It does appear, though. I mean, and Jeff might roll his eyebrows. I don't know. If I say that it does appear that 33 is like a floor now. I think we've established a new floor. So I'm not, I don't see gold. I don't see silver collapsing from there, but I'm not sure that it's going to move much higher in the immediate term. I think the big move is still ahead of us.
Well, let's talk about gold because it came within inches of previous all-time highs recently, showing tremendous strength. We've got massively increased geopolitical risk, of course. The Iran-Israel war seems to be ramping up. Out of control government debt and deficits, a US dollar that is looking fairly weak at the moment. Is this the perfect storm for gold to perform? And how high do you think it could go from here? Adrian, I'll start with you on this one first.
Well, I don't know that it's a perfect storm. I would say that the traditional factors that have made investors, particularly Western investors, buy gold as an investment, not we're not talking insurance or security here, but the traditional factors, which are mostly economic factors, are turning in gold's favor. So if you look at the last couple of years, everybody's asking why gold is running, but Western investors, North American investors aren't buying. And it wasn't totally illogical because the people that were the forces that were driving gold over the last 3 years and the reasons that those people were buying gold had nothing to do with macroeconomic factors in the West. So the narrative was a strong economy, high interest rates, low and declining inflation, reasonably strong dollar. That's precisely the wrong environment to be buying gold. But those factors are turning, and we don't need to go too much into it, but it's fairly obvious to me that the economy is showing signs of slowing. The dollar, as you mentioned, is showing signs of weakness. Geopolitical factors have always generally have been very short-lived. That's not what drives gold on a longer term basis. You only have to look. I mean, I've done a study on this going back to the Iran hostage situation. Funny, it's Iran again, but the Iran hostage situation in 1980. And typically, geopolitical events have short term spikes. We saw this very clearly with the Russian invasion of Ukraine, where gold was moving up in the 6 weeks ahead of the troops moving over the border on anticipation of that happening. And within 6 weeks, it was just back to where it was. Obviously, if the market believes that a situation could continue to worsen, and there is that concern about the Iran situation, gold will tend to hold up. But you only have to look at the last few days. Gold has not built on that initial surge. So it's the economic factors that are most important in my view. And yes, they are turning significantly in
Yeah, and
gold's
the
favor.
geopolitical yeah, the geopolitical headlines not driving long-term sustained price increases certainly bears out to me. And the same is true of the oil industry as well. We've seen oil, WTI crude spike up on this war beginning. If Iran does actually close the Strait of Hormuz, that could be a totally different story. We could see sustained higher prices. But same idea, generally they drop back down. Jeff, how are you currently viewing the health of the gold sector and the catalysts that are driving it?
Well, I agree with Adrian that it may not be a perfect storm, but it is a storm. There are a lot of factors out there that are driving the price. I think there's a couple things to know about gold right now. One would be that I think it's fairly obvious that a lot of the gold price uh, that has risen recently is due to tariffs and the threat of tariffs, the talk of tariffs, the uncertainty around tariffs. So if that were to get resolved in any way that the general markets view as positive, then the gold price would probably fall back on that. However, if that continues, oh, it's going to continue to run. And there's a lot of uncertainty out there geopolitically, with the wars, with politics, with deficits. There's so many swirling factors around the economy, the markets, finances, monetary concerns. All of those things are swirling around us. So it would not surprise me that even if we see gold pull back based on any tariff resolution, that it continues to rise, even on a pullback due to all these other factors. So I think the other issue is that long term, gold's in a bull market. This is very clear. The average bull market runs about 2.5 to 3 years, depending on how you measure it. We are at about 15, 16 months right now. So, in my opinion. So, we've got a ways to go. And then, of course, there's always black swans out there. I looked at all the crises over the last, 50 years or so, and almost half of them, Jesse, were black swans. They weren't expected. COVID being a good example of that, right? And gold responds to those typically. So, gold tends to rise in recessions. Gold tends to rise during stock market crashes or bear markets. So, I think there's a lot of reasons to remain long gold, not necessarily to make a lot of money on it, but to protect your assets and use it as insurance and as a hedge. I think that's still in play, and that's going to be in play for probably, uh, at least a couple of years or more.
And the gold mining space now seems to be waking up, as evidenced by the fact that the GDX ETF has greatly outperformed gold year to date. The GDXJ actually even more greatly outperforming gold. Are the miners finally coming into their own here? And do you expect continued outperformance of the miners versus gold up ahead, Adrian?
Yeah, no, absolutely. As we know, in the last couple of years, the gold stocks, although they moved up, did not exhibit the traditional leverage that we associate with the gold stocks over bullion itself, nor the silver stocks over silver. But again, there were logical reasons for that. The people driving the price of gold, the central banks of the world, Chinese, non-official Chinese investors, who were buying gold, and frankly, just wealthy individuals and families concerned about the fiscal situation around the world, as well as other things, the massive debt. Those people wanted physical gold. The central bank of Uzbekistan doesn't go and buy Newmont mining. And so that's why the miners kind of didn't exhibit that leverage. We're seeing it this year, as you mentioned, both of the GDX and the GDXJ are more or less double the performance of bullion this year, and the silver stocks are outperforming silver. And that, again, in my view, is a reflection of the fact that North American investors, whether they're retail investors, family offices, hedge funds, whatever, North American investors are finally turning towards gold, the gold space, which means they're buying silver, they're buying gold stocks, and I think it's just beginning. You look at the inflows into the GDX this year, it's still massive outflows, over $3 billion or nearly $3 billion right now of outflows this year. It's only been in the last month, but we've started to see meaningful inflows into the GDX, and the GDXJ has only seen a few days of net inflows this year. This might just, I'll close on this, but this might astonish you. I think the bull market in gold stocks has only just begun. To use a cricket analogy, maybe the third batsman has just come in. That's like the second innings in baseball, I think.
Jeff, would you agree with that sentiment that we're in the early stages of a gold mining stock bull market? And what are your overall thoughts on the way the miners have performed so far this year versus gold?
Well, I absolutely agree. My money is where my mouth is. I am investing aggressively in stocks that we recommend, but also new opportunities as well, because I think there's I don't want to exaggerate or anything, but I think there's massive opportunity here. So as I mentioned, I think the gold bull market started back in February of last year on leap year day, because the day before the Fed came out after the market closed and said, we're going to lower rates more often and quicker than we thought we were. Now that's since changed, but gold ignited the next day, leap year day, and it's never looked back. Since that day, gold is up as we talk here today, 66% since that time. Um, GDX is up 107%. GDXJ is up 123%. So what you want to see in a bull market is the gold price moving up. You want to see GDX outperforming gold, and you want to see GDXJ outperforming GDX. All of that is happening. Now, that's one thing. So it's a bull market, you need to be invested. But we do have some bifurcation. There are some stocks out there, some high quality companies that are just not moving. So what's happening is, what I've observed is that you have a number of stocks that have doubled and tripled and more just year to date. While you have others that have gone absolutely nowhere, and they're high quality companies. We probably all own some of them. So there's a little bit of bifurcation there, and that kind of points to opportunity, right? The companies that have been around a while have big assets and strong reserves, big reserves, and they're not really moving all that much yet. I think as long as you're zeroing in on those kind of companies, that at some point those are going to move as well. Um, and again, if I'm right and Adrian's right, we've got years to go in the with the bull market in gold stocks, which means that it's okay to buy some of these that are really lagging, as long as it's a high quality company. And I also think you do need to invest in new opportunities, new stocks that come up. There is some research out there that says the companies that move the most are the newest ones. So you do need to dedicate some funds in your mining stock portfolio to new opportunities. It doesn't mean dump everything else and focus just on those. It means you need to have some cash available to invest in those. So those are the observations I have about the gold stock bull market. And yes, I'm aggressively along.
Well, let's talk about the silver mining sector. Obviously, a much smaller handful of names if we're looking at pure play silver. And as Adrian mentioned, silver stocks also outperforming the metal. If we look at the SIL ETF, it has approximately doubled silver's gains so far this year, perhaps showing that the silver mining sector is a place to be watching right now. Give us your thoughts on the potential opportunity there. And in your view, is this a good time to be entering the space? Jeff, I'll start with you on this one.
I think you have to be selective. You always want to look for the highest quality companies. Um, some again have moved a lot, even in the silver space. So you want to be careful just jumping into those. I'm not saying they're going to top right now. I'm just saying you want to be careful if they've doubled and tripled or more year to date. You want to be very selective, only buying a dip and that sort of thing. I personally would look at the companies that haven't moved yet. That's a good opportunity, just like in the gold market, to look at those companies with big assets or growing assets or making discoveries, going into production. That type of profile attracts me. And then, of course, if the stock price has not moved, I would focus on that. But I think in the end, again, if we're right about what gold and silver are going to be doing going forward, silver stocks are some of these silver equities are going to scream. It's going to happen. Think about the idea of silver getting to 50 and then breaking through it, like some people believe. If that happens, holy crow, look out. I mean, the sky's the limit on, not literally, but silver could easily go to 75. It could go to 100. And just imagine what the silver stocks will do in that environment. So I think there's a lot ahead, even if silver doesn't break through 50, there's a lot of opportunity with the silver equities. Just don't chase, that's the main thing.
Yeah, absolutely. And there's some silver producers that are actually very happy with prices today. They're still making a good profit margin. So perhaps
Yeah.
those are companies to look at as well. Adrian, are you seeing opportunity right now in the silver mining space, and what are your thoughts?
Yeah, generally, I would agree with what Jeff said on the silver stocks. I think it's a time not to chase them, but to look for dips and so on. You mentioned, Jesse, that there are far fewer silver. You used the word pure silver mining companies, miners or exploration, than there are gold, obviously. And in the gold space, as an investor, there's 3,000 gold stocks around the world. I can pick and choose management, size, jurisdiction, etc. You don't have that luxury in the silver market. It's difficult to pick a silver stock and be very picky about jurisdiction because you just don't find big silver deposits in many countries around the world. One thing I want to focus on, if I may, is everybody knows the silver demand is different from gold demand, meaning there's a lot more industrial demand. I think it's been increasingly widely recognized that the supply side is also different. The silver supply side is different from gold, but it's also different from what it was a quarter of a century ago. Traditionally, and even up until, as I say, 25 years ago, something like 78 to 80% of silver came from primary silver mines. You also had some silver stockpiles, by the way. Today, you have virtually no silver stockpiles, although at a certain price, it'll always come out of the woodwork. But you don't have large silver stockpiles. But perhaps more importantly, most silver production now is byproduct. Something like 75%. So it's completely flipped. 75% of silver production is byproduct. Now, some of that is byproduct of gold, but a lot of it is byproduct of zinc or lead. And so the lead miner in Bolivia or the zinc miner in Peru does not increase his zinc production or open a new zinc mine just because the price of silver has changed. So silver production does not change very much. It's not responsive to changes in the price, up or down. And that's one of the reasons why silver prices, Jeff used the word spiky, move so much more. They're much more volatile than gold because the production does not respond to changes in price. So having said all that, and also focusing on the fact that there are pretty few silver names out there, what you find is that companies like, let's just say, Pan American Silver, which is the second largest silver producer, I think, or one of the largest silver producers around. It produces last year it had 18% of its production was from silver. So gold was over 50% and the rest was base metals. Even with the MAG acquisition, it moves to 22%. And yet, because it's Pan American Silver, it will move when the silver price moves because investors are looking for silver stocks. Even Fortuna, which has changed its name from Fortuna Silver to Fortuna Mining, because for that very reason, they produce much more gold now than they do silver. But even Fortuna responds when the price of silver moves. So, so I agree with what you said. I agree with what Jeff said. When silver really moves, investors are going to start looking for a relatively small number of names, and they're going to have outsized returns.
Well, let's get a little bit more specific when it comes to the areas about the gold and silver mining sector that you're both currently looking for value in. You can feel free to name individual companies that you think present an attractive value proposition. If you want to talk about certain sectors, certain jurisdictions, anywhere that you're currently watching that you think maybe more people should be paying attention to. Jeff, I'll start with you.
Well, I'm looking for an opportunity with a company. I'm zeroing in on the company. So yes, we want the metal, the backdrop of the metal to be positive. So for me, that's gold, silver, uranium, and copper. We have a couple lithium plays in there, but the lithium market is actually oversupplied in 2025. So you have to have a little patience there. But in the other four metals, I'm zeroing in on companies, focusing opportunity. A company that is either has high odds of making a discovery. They are in pre-production. They're gearing up for producing a mine. They are rapidly growing their resource. Things like that are what I'm looking for. I think that's where you're going to get your biggest bang for your buck. And of course, there's risk. They're not all going to work out, but many are starting to work now, and it's a lot of fun. So I'm focused on those. I could name companies all day long, but people can read them, for free on the Gold Advisor site. You can see the list there, and there's several that are new that we like. There are several new ones also in the pay letter, paid or prospector. So, but I think that's how I'm focused is not just looking at any company, but zeroing in on very specific factors that are very compelling, that must be compelling. They must meet the criteria I outline in the book. And then those are ones that I'm buying. So again, I mentioned earlier about buying new opportunities. So, roughly speaking, a third of my capital is going toward brand new opportunities. A third is in companies that are already moving. And if you don't own them, just make sure you're buying a dip. And then a third is the value category, the companies that have a large resource that's strong, maybe with a PEA or even a full feasibility study that just haven't moved yet. And as long as you're patient, that's a high quality company, pro mining jurisdiction, etc., then that could be a good value proposition, those that haven't moved yet.
And Adrian, what about yourself?
Yeah, we're buying across the spectrum. I mean, I look at it a little differently from Jeff. We're buying across the spectrum right now. I mean, typically, as we know, the junior stocks will move after the seniors, and then the exploration will move, after the intermediate companies. But right now, even the largest companies that have had, and the best that have had the biggest moves are still undervalued on a value basis. Forget price. Look at value. You look at someone like Agnico Eagle selling in the lowest 20 percentile of its historic price to cash flow. And that's when gold is almost at new time highs. When margins, we typically get multiple expansion. You typically get higher multiples when the gold price is high. But Agnico, which is a top quality company, you can look at something like VRIC, which has jurisdictional risk, but that's selling in its lowest decile of its price to net assets in its entire history, which again doesn't make sense when the market is doing what it's doing. So we're buying across the spectrum. We're buying the large cap royalty companies as a foundation. Things like Franco and Wheaton, as well as Royal and Osisko, are just great for a foundation of a portfolio. People think that they're overvalued. People think that they don't perform well in bull markets. They're right for bear markets, not for bull markets. I couldn't disagree with both. Yes, evaluations are not the kind of thing that will get Warren Buffett or Ben Graham sort of excited. But the valuations of Franco and Wheaton today are no higher. The valuations are no higher than they have been historically. We're buying the best of the what I regard as the best of the miners, things like Agnico. And I agree with Jeff completely. Well, again, we're focusing on different areas, but I agree with him completely about looking at companies as companies, because the gold sector, gold and silver stocks, it's one of the most idiosyncratic sectors out there. And that's true of the seniors, and it's even more true of the juniors. A rising tide doesn't necessarily rise all boats. I mean, last week, I just looked at 10 stocks from the XAU at random. I picked them at random. And 3 of those 10 were actually down over the last 12 months. And whereas 2 of the 10 that I picked at random had gone up well over double. I mean, well over 130, 150%. And so they're very, very disparate returns that you get, even on the big cap stocks. And then, of course, when you go further down the food chain, those differences are much more. So for me, again, we're buying across the spectrum. You know, I've mentioned Agnico and Franco. If you don't own them, I would still buy them. And then as we go further down the food chain, I tend to focus much more on management and on balance sheets and on long-term business plans. I don't buy a lot of what I'll call drill hole plays, and that's not a disparaging comment. I don't buy a lot of those because I'm not a geologist, so I don't have an edge over other people in the market. I think I do have an edge when I'm looking at balance sheets and analyzing people and business plans. And so that's what I'm looking. And there are just some great companies out there that are still very, very cheap,
Yeah,
undervalued.
I love that foundation of the big royalty streaming companies. I think for a lot of people out there, they can just go with that, just buy Wheaton, buy Franco-Nevada, and kind of call it a day, unless you're willing to do that work and put in that work. Which leads us to our next point of telling us about your services and how you can help out people who are watching. Jeff, let's start with yourself and the goldadvisor.com. Tell us about that service.
Well, how would you like to get a paid mining stock newsletter for free? That's what we offer at thegoldadvisor.com. All you have to do is create login credentials, takes about 30 seconds, and you can read what essentially is a paid newsletter for free. There are companies that we personally own. They are sponsoring companies, so be aware of that. But they're companies we personally own. This is our personal portfolio, and we will not bring a company in just because they could write a check. It has to be a stock that we either own or will buy after we give subscribers first crack. And then we have the paid newsletter, tomorrow's issue, which will be out by the time this interview airs. Pater Prospector, named after the book. That, we have a best buy list in there tomorrow. So some of those stocks are really running, and there's a lot of good opportunities still there. So that's something to look forward to. And then the book Pater, which we were talking about it earlier, just it took 2.5 years to write it during COVID, off and on, of course, but I put a lot into it, and you can read a free chapter, the sample chapter on the website under the book tab. Scariest mine I've ever been in. So if you've not read that, I will give you a warning about if you're claustrophobic, you've been warned. So, but it's fun. I put a lot into it, and I tried to make it entertaining, easy to read. A lot of people have said that, so hopefully I hit the mark on that, but that's available on the website or on Amazon too.
Great. I'll put a link in the description to thegoldadvisor.com so people can check all of that out. Adrian, tell us about Adrian Day Asset Management.
Yeah, so I actually have 2 services. One is a newsletter, and there are 2 distinct services I need to mention that. One shouldn't be confused with the other. We have a newsletter where we recommend and follow a small list of specific stocks. And then we have the money management where we manage money for clients. And our clients, I think what distinguishes our service a little bit is 2 things. One is people can personalize their accounts if they wish. And secondly, we tend to take lower minimums than most money managers, so long as that minimum makes sense for the client. You know, I don't want a guy, I once had a guy with $100 million in T-bills and municipals want to give me $20,000 for gold stocks. And I told him just not to waste his time or my time. I mean, it's just silly, but we'll take 20,000 from a student, right? Who's just starting out. One other thing, if I may, we are global managers. We are not gold specialists. So people can have a dedicated gold account. They can make it just seniors, just juniors if they want. We have dedicated resource accounts, but most of our accounts are global accounts. So we'll include gold and silver, but aren't purely gold and silver. And best place to look would be adrianday.com, where you can see both of our services.
Great. I will put that in the description below as well. Gentlemen, this has been an extremely enlightening conversation. Thank you so much for coming on the show.
Well, thank you very much for having us.
This was great, Jesse. Let's do it again sometime.
Yeah.